Among the easiest form of trading, there are partnerships. So in Italy, there are basically three types of partnerships: società semplice, società in nome collettivo, and società in accomandita semplice. So there are few differences among those, but there are many common points. So first of all, any partnership is a tax transparent entity, which means that you do not get the double taxation just like the corporation. And whatever money the partnership makes is then turned into money payable into tax payable and income as arose on the partners. So let's say that you have a 50% ownership in a partnership. The partnership makes 25,000 euros of income, while your taxable income is 12,500 euros. Now, you do not pay yourself dividends, and that is also tax efficient. And it's very important to know that partnership have a limited liability. So partners are liable with their present and future wealth to any liability or obligation by the partnership itself. You cannot screen your personal liability from the partnership liability and vice versa. So this is very important. If you operate in a business with a high litigation risk, probably a partnership is not the best idea. But going down into the different types of partnership, let's start with the simplest one, which is the società semplice. This is only for holding and agricultural activities, which means you cannot run any trading nor commercial activities, but you can keep it as a holding. And this is a good tool to tax planning because first of all, you can do it as a tax transparent entity, but most importantly, you do not pay any wealth tax for any foreign held assets, and those, they fall outside the scope of inheritance taxes. So think about that. Is it more efficient to have an investment portfolio held personally or through a società semplice? Well, if you have to pay inheritance taxes or if that investment portfolio is located abroad, the answer is the società semplice. Then we have the SNC, which is the società in nome collettivo. And you are required to have at least two partners, they all share a limited liability, and basically the good thing is that being tax transparent entity, normally it's more efficient to trade under an SNC because you split in two your taxable income between the two partners. However, I normally prefer the SAS because the SAS provides one unlimited liability partner and one limited liability partner, which creates the same tax efficiency effect as the SNC because you split the taxable income in two. And if you don't know why, well, think about that. Is it better to make 50,000 as an individual or two people making 25,000 each? The answer is the second because the tax breaks are progressive, so you wipe out taxes at higher rates and you can have a more efficient use of any tax deductions because you pay fewer tax. However, the limited liability partner doesn't share any liability with that, and he or she is also not required to register at INPS and pay the quarterly Social Security minimum payments. So whenever you think about the right partnership for your business, you must always think about income taxes, tax transparency, unlimited liability, and also inheritance tax and how to preserve the wealth of your family through the future generations.